Welcome to TradeTheNBI.com. This is Jonas Report. Is for the ninth, and well, look at that chart. That just tells you everything. This is what, actually, I wouldn't even call it panic. I think the bid really was just pretty much pulled away, and in that pull away, boom, you had this major drop. The reset was in, and now you have a full buy signal developed here from a daily standpoint, which very interesting. I took advantage of that dip, bought very close to that bottom when we were limit down. Because the reality is, despite what the election was, we all know there really isn't anywhere else you can put your money, unfortunately, at this particular moment. That may change very rapidly. The sudden election of Trump, which most people didn't see coming, which is confusing to us because we've been talking about it for, well, quite some time on the Skype chat. So kind of anticlimactic, but then again, so as the market moves, that we've seen anticlimactic because we sort of expect what they've been doing. I would expect a lot of this to get filled in. We knew that we were positive extremed on the breakout move, which was the lead up to the expectation. There still isn't anywhere else where you can put your money. I mean, the fact we got overbought the other day is going to obviously have the Dow, depending on where it opens, we could be back somewhere in between here. Not all that dramatic, I don't think, at this particular point. Euro took a skyrocket on the paranoia and has pretty much come right back into alignment. Bonds, of course, actually, I think that these actually may have a chance at a fairly decent turnaround here coming up soon. Oil is never even a factor because it's not going to happen with the liquidity of it. You could see oil at record lows. This is going to be very problematic for the Fed, which we talked about why. It's going to be a very combative situation because it's going to put a lot of pressure on interest rates to rise, and it's not because Trump is going to be against the idea of low rates. Had a brief interruption there from one of the somebody's podcast delay, and then all of a sudden start up. Gold, it's not really relevant at this particular point in the equation. So here's what happened. We were limit down. In fact, I'll bring up my trading matrix right here, and we can see where I entered. There it was. Down at the 32 level, anticipating this move, and now here we are, midway up in the 87 range. So it's not about fear, it's just about following what we could see as far as the turnaround. We had the dip down right here at limit down. It happened a couple of times, actually. We had some fairly decent signals on each of these pops. All we're looking for was the close above long algo, and sure enough, that's been the return all the way up in here. I may clear off a little bit of that simply because we've had quite a nice run on that. But needless to say, this is my whole point about just following the indicators. You don't have to get paranoid. There's no need to freak out. It's just a matter of following our expectations and seeing exactly what the signals are. Now, for those that didn't follow, we were talking about this chart that we posted. The short was so clean. Here was our break that came in 2147, turned red, and never looked back from there. So from a short standpoint, it was twice as much as the long has been. Nice overall in general. I mean, I don't think there's anything other than that to say. This has been a beautiful read from our indicators, and that's just the way you have to go with it. Still, I think overall, as the dust settles, bias is still going to be more to the upside than not. There's going to be some shakeout with this. I mean, we talked about some of the different industries that are going to benefit versus others, and so there's going to be some rotation in that. So a lot of this hype and decline is probably going to have to be revisited a little bit lower from this breakout and stuff, simply because now you've put some people in some awkward positions. You had forced shorts to cover, there wasn't anybody left at the top, and now you've stuck a lot of longs that just put money into the situation, and they're in a world of hurt. So you got to take advantage of them first before you can then sort out. And I know that sounds kind of mean, but hey, when you play with sharks, you better expect to get bit. That's just the way I see the market, always have, and I've tried to convey that to you on a regular basis. It's not personal, it's just about taking advantage of any expressed or exposed weakness, and that's what you've got. And if you're not going to take advantage of it, somebody else will. As always, though, could you look for me on the Skype chat? Trade well.